What's going on, guys? Brian's here. Today is Monday, December 4th, 2023. It is about 1:45 a.m. in the morning Eastern time. So I guess this video is kind of a Sunday night, early morning, Monday prep for the week type of video regarding the gamma exposure. If you've been checking out some of the latest videos in which I've been doing, I've been sharing some of the how I prep for the week, as well as some weekly recap videos pertaining to the gamma exposure levels. So I highly recommend you guys check out this video. If anything in this video that I'm about to record right now is confusing, please reference this one as I went through it on a step-by-step basis, whereas this video that I'm recording right now is kind of a glance over it because I don't want this video to be as long. We're just starting with the levels in which was shared in this video right here and the same chart here. So this is this chart. I shared it at the start of last week, and it was all based on this gamma exposure report, as I did it live within that video last week Sunday. So this is kind of the results for the week, and I think it's very important to reflect on how the previous week's levels resulted in, because this is how I ended up getting really well trading with gamma exposure levels. And this is what we're seeing right here. In that previous video, you guys know the purple levels were the absolute gamma strikes, and you guys can see purple levels are where the price action will tend to be pretty choppy. So again, this was shared at the start of last week. Look at how the week ended up trading. Price was very choppy. 455, there was a lot of confluence around this level, as it was the absolute gamma strike. It was the highest positive gamma strike. It had the highest open interest collectively, and it also had the highest call open interest. And we can see here on Monday, price is very choppy around it. So this was one day, the SPY tend to be very choppy around it. Then on the Tuesday, the SPY ended up closing almost just about there. On Wednesday, we'll come back to this day in a second, but you guys can see price ended up coming right back down to where 455, and then ended up closing pretty close to it. On the Thursday, similar price action as on the Monday and Tuesday. It was very choppy all around these absolute gamma strike prices. Without a catalyst, the market is going to tend to float around the high liquidity strike prices, which tends to be the strike prices with a lot of absolute gamma. On Friday, Jerome Powell was talking. So just like in the previous video, I mentioned Fed announcement days, CPI days, and the days in which Jerome Powell is going to talk are generally going to be some of the days in which the markets will push past some of these strong gamma strike prices, as at the end of the day, the gamma exposure can only do but so much, and it's ultimately going to come down to massive investors that are actually going to help move price action in a certain direction. So on Friday, we ended up getting a breakaway from these absolute gamma strike prices, which was inevitable because the SPY is not going to stay at 455 for forever. It has seemed like it's been here for forever for the month of November, especially pertaining to the later half of November, but it is now a fresh new month and we're seeing the first push away from it. If we take a look at Wednesday in isolation, this is a day that would have made any bear nervous, because yes, we did break over the second highest positive gamma strike, and naturally we would expect price to tend to roll towards this 450 strike, which was sort of the plan. The important things, again, I want you guys to take away: these purple strikes, absolute gamma strikes, price is going to be choppy around them. If we are in a net positive environment, then the positive gamma exposure strikes are going to be strikes that price will tend to want to head towards. Or better yet, the opposite, in a net negative gamma environment, we will see price will tend to want towards to head these red strikes, which are our negative gamma strikes, unless of course we're heading to an expiration where implied volatility is expecting to decrease. So that is the one difference. Again, I'm glancing over this because I've been repeating myself this entire year for multiple videos, and now moving forward, I want to make these videos a little bit more concise so I can put them out a little bit more frequently for some of you guys. So as we take a look at last week, what do you do on a day like Wednesday where, let's just say you're a short or you're in a non-directional trade? Let's just say you're in a 455 iron butterfly that you opened here on Monday, and then you're thinking about if you want to close it because price is now gapped up over the P1 strike. Naturally, this would hold, and then the price would tend to try to head towards this direction. In this case here, let's just say you were long this Monday morning and you bought at the opening bell. Your stop loss can be right below that low of day, of course, but this is where using intraday tools such as the intraday VWAP can actually become very helpful. So as we take a look at this here, this is the same chart Now just switch it over to a 5-minute time frame, and I have VWAP on the chart. That is that gray level right there in the background. As you guys can see, this is price gapping up. It opens here, touches this level. You guys can see here, actually it's in the background here, but price did wick right down to this 457 level before it was ultimately pushed off of the level. So if I just hover over here, you guys can see that the low, pay attention to this level that you guys can see right there, 457 to the dot. So again, this is what we're paying attention to right here where it says L. That is the low of the candle, 457. That is exactly where price dropped down to as the market opened and then immediately pushed right off. So imagine if you're long here and you see some sort of a bull flag forming because you're an intraday, scalper, and you're seeing this pattern forming and you decide to get long here. Your stop loss in a sense can be right below VWAP, and that right there will keep you out of trouble. So let's just say you are a long and then you see price break back below VWAP like this, you are essentially getting stopped out here. If you are a person running a non-directional trade, you are pretty much, the smart thing to do is to wait a little bit after 30 minutes after the market opens and see what happens, because as you guys will see as I hover my mouse right here, pay attention to the time in which this happened. This is 10 a.m. Eastern time, usually a moment where the market will tend to put in some sort of a reversal, or if it's going to reverse for the day, it's usually going to be 10 a.m. and it might not be a full-on reversal like it was this day. Sometimes you'll just see price action heading up, then 10 a.m. happens, boom, it comes back, touches the low of day, and then we might bounce right back up before forming some sort of intraday trend if it's going to go down like this. It doesn't always happen this way, but the point of the story, or the moral of the story here, is use your intraday VWAP if you're ever confused what to do, and then wait until about maybe 10:05 or so to decide, 10:10, 10:15 Eastern time, to decide what you want to do regarding managing your positions. And obviously each time will be a little bit different. If you're in a massive, 1 DTE iron condor and the market gaps up and then you're worried about your iron condor getting blown out, then obviously use your discretion, adjust your trade if you see fits, but I'm just sharing my suggestion. I was actually in a situation like this. Again, you guys will see in the video that I'm planning to release later this week where I'm talking about the iron butterfly that I had, as well as the double calendars in which I had. Now moving right along, as we jump back to, I guess one more thing I want to point out, let's just jump back to the 15-minute time frame. This day right here actually caught me because I was short on this day as the market opened. I bought the 450 put for the Friday expiration. I believe they were around 57 cents, and I was essentially risking 15 cents. So when you're taking trades like this, the reason, here's a consolidation. We had a little bit of a gap down. It was a Tuesday. I wasn't sure if price is going to continue going lower. If we take a look at where VWAP was, I knew I was going to use VWAP as some sort of a measure for risk, and I was essentially risking pennies for the potential for price to at least come down to the gamma flip level. And then if price was to break down below the gamma flip level, I was looking for 450 to be the ultimate PT. I figured it was worth the risk reward because after this consolidation, I was thinking maybe this is, maybe all we'll get for this week regarding some sort of a gap down. The edge in buying puts was pretty high, as puts are super cheap right now. It's ridiculous how cheap they are, especially since the VIX is so low. So my logic at that point was just like, hey, it's worth the risk. It's not a great setup. It's not a great trade. This is just a consolidation gap down for me, and I figured since we were below the absolute gamma, maybe this level was going to act as some sort of resistance. As we can see, price was pretty choppy here, but once it started getting back over VWAP, I considered the trade would be in a little bit of trouble. I ended up stopping out around here if I remember correctly, and then my last piece was around here, and again it was about a 15-cent stop loss. This is something I had shared here within the QTA Discord. But to keep this video short, not going to hunt down every trade in which I took. Just want to share with you guys, again, that was the start of the week there. And this is the gamma profile. So if we take a look at the gamma exposure profile, this is it pulled up pretty large. What do we learn from here? We knew we drew all these levels on the chart, and that's what we're going to do for this video here today. And we had 460 as where the positive gamma exposure rolled off. You guys can see that this was based on last week's expiration. So I chose the Monday, Tuesday, Wednesday, Thursday, Friday. And then I plotted these levels on the chart, and that's what we're looking at right here. So if I actually crunch this down, let's zoom out. Oh no, let's go back to the 15-minute time frame. You guys can see, look at where price ended up stalling out. It got stuck around 459, so that was right in between here. It's almost like if we come down here, you guys can see that price action as it was heading up, it would have to build up some more strength to get over this 460 level, especially since the rest of here was pretty flat. We weren't seeing that much positive gamma that was growing past that 460 strike. So the expectation would be that as price would head towards this direction in a net positive gamma environment, the absolute GEX was acting as a choppy area, as it should be. and price got over this 457 level, the expectation would be that it would head towards here, but it will probably park itself within here unless it got over this level. Then we would expect some sort of trigger that would cause price to go a little bit higher, but that didn't happen. 460 was that level, and we're not trying to predict, we're not trying to say this is exactly what's going to happen. We wait and see. If price gets over 460, then we reassess and we see if we have new reasons to think price is going to continue to go higher. In this case, what we do know is this was a little bit of a gap in between here. Price can likely get up to 458. Once it gets up to 458, in between here will probably be an area where price will get a little bit choppy, and that's why we draw these levels on our charts. We have 460, 457. Between here, I don't mark every single level because I think that becomes pointless. In the chat, I remember telling you guys that this might as well have been 460 as far as I was concerned. And then we see price gets a little bit choppy right in between here. You guys see how price interacted around the absolute gamma. Again, 1, 2, 3, 4, 5 days out of this week, price was pretty much within this region. That is amazing for non-directional options spreads based traders. Now, as we move right along, I'm happy I got that under 15 minutes. I want to make this next segment even faster. So let's jump right along now, as I've already plotted the levels for this upcoming week. And I just want to go over them pretty quickly with you guys here. So this now is based on, this is the overall profiles. This is the quant trading app, Absolute GEX tab. So I just came here, click that. It's default with the SPY. First thing, just like the last video, let's take note of this. This is pretty interesting. You guys can see this is a large imbalance right here in premium, and this is all options expirations. If it's not selected, it means QTA saying there's currently no gamma exposure for that strike, for that expiration, so it's not going to even include it in the calculations. The significant things to take note of, again, just marking this means the market still has very rich call premium out there, which is pretty alarming. That's not something we're going to see. Over $80 million more in call premium right now than put premium across the board. It's pretty large. And then as we scroll down here, we can turn on the Absolute GEX, and then we'll see that this is pretty interesting. We have a dominant strike of 460. This is pretty powerful right here, 465. But then more importantly, in my opinion, is this Absolute GEX that is all the way back down at 455. So nothing too crazy sticking out here other than the fact that 460 is a massive level across all expirations. Above here, things look pretty flat regarding open interest, but then we can see as we scroll down here, there's a ton of open interest down here, a ton of open interest down here, and a lot of open interest down here, all pretty much to the downside. So let's move right along. Next thing you do is just uncheck all of these, and then I'm just going to select the expirations for this upcoming week. Again, Monday, Tuesday, Wednesday, Thursday, Friday. The 8th would be the Friday. And then I press submit. Once I press submit, this loads up. So I made sure to just preload everything this time just to make it a little bit quicker. And now we see that this is also in alignment with the larger, or the complete options chain right here for the SPY. Same thing, massive imbalance for this week. Again, that's just a sign of caution. It's a red flag right now for bulls. As we scroll down here, and let's come to the Absolute GEX. I already have it on. Let's actually turn this on as an overlay. What we can see right here is the same 460 levels and is in confluence with the overall chain. We see this level right here, 462, but then things kind of mute out here, and then we can see, let's just say we can come up with this idea from here that if price was to get below this strike price, it can kind of slip down to this next strike price right here, which is 455, which in my opinion, this is actually pretty interesting that this is the absolute gamma strike, even though the SPY is closer to 460. Now, this is something that I've mentioned before that is pretty interesting to me. So in this case here, this is the current spot price. This is the closest strike price to where the SPY currently is. So the SPY last traded price is 459.10 cents. So 459 would be the current at the money strike price. It's very interesting that this strike right here of 455 is 1, 2, 3. It's about 4 strikes away, and this is the strike that has the absolute gamma versus the one that is right next to, such as 460. We would expect this, in my opinion, to be the absolute gamma strike, but it's not. It's this one. Whenever I see stuff like that, that's where I will tend to form some sort of a bias, unless that changes at the market open tomorrow, or maybe 5 minutes, 10 minutes, 15 minutes before the market opens. I might run this report again and see if anything's changed. That is pretty interesting to me. If we take the steps from the previous video and we do the same thing, so here's our call open interest strike, here is our P1 strike, that's both 460. We just go go right from there. So this is the positive gamma strike. This is the call open interest strike. So this is the strike price with the highest call open interest. And then we have AG2. So that is the strike price with the second highest absolute gamma. So let's just turn this off right here. And we can see that it's right here, 460, because this is our strike price that has the highest amount of absolute gamma, and this is our strike price that has the second highest, which is the 460. So all I did was I marked that right there. Then let's look for our absolute gamma strike, which is 455 right here. So 455, it's letting us know right there, boom. It happens to also be the gamma flip strike. So that's why I have that marked on the chart. And then we also have, this is also the strike price with the most amount of open interest combining calls and puts, which is 455. So I'm going to actually mark that on my chart here because it looks like I left that out. So I'm going to put, it is also the HOI, which just stands for high open interest. Save that, so just let me know. So in my opinion right now, 455 is just as powerful as it was for the last couple weeks. I don't want to project any type of bias on you guys, but I would not be surprised if we see 455 this week. I would not be surprised if the SPY struggles to hold over 460. Now, if it does past Tuesday, that will definitely change a little bit of my perception here. But for the now, I'm pretty much going to be pretty cautious for this week here. And if not this week, then definitely the next week. But I do have a broken wing call butterfly for tomorrow here. I might as well share that with you guys on Friday. This is the trade right here. So I'm not really risking much, as if the market was to sell off. I believe I grabbed about 5 of these or 4 of them. I don't remember. Let me actually look it up over here and then drag it onto the screen just so you guys can see it. So this is it here. I remember I used about $500 in margin. So yeah, it looks like I grabbed 4 of them. And this is a good way to, if you want to be a little bit more conservative. I'm not really scared about the SPY being past 463 for tomorrow. So I grabbed this as the markets closed on Friday. And as far as I'm concerned, I'm pretty much risking $140. If the market was to sell off, I won't even bother really doing anything with this trade. However, if the market does end up heading up, it's a pretty good 1 to 2, maybe 1 to 3 risk reward. If we pin around 462, this will be a monster trade regarding the risk reward, but I doubt I'll be holding for the whole day on Monday unless I see something really good in price action. So it is pretty good to see 462, and I'm pretty much targeting, if we take a look at the break evens here, this is 463 and 65 cents. So I'm pretty much targeting from about here down to around here, actually was the break even. So 460. So within this region here, right around this positive GEX range, if the market was to have some sort of a bullish Monday, that'd be a great trade. However, if the market is pretty flat or it pulls back, it won't really matter. This is actually not my biggest trade that I have running right now. If you guys care to see, this would be my double calendar that I have running right now. So this is one of my major SPX positions. This is one that's closer to 10 grand. And this is using a double diagonal expiring on the 15th to the 22nd that I plan on closing this week. If I were to show it to you guys in option strat, this is actually what it looks like, as this might be a little bit easier to read. So I have currently 3 of these, and this is just a trade I'm planning to hold just for a couple days here this week, and we'll see how it goes. If implied volatility comes down for the front month, and this trade will end up being a pretty nice one. Again, nothing too crazy here, but that is one of the ways in which I'm looking to capitalize on if the market was to go up in the short term. If it stays sideways and if it was to pull back down to here, then I'll open up some sort of other trade. Now, this is our options heat map. So if we go back to this chart right here, that is just, I'm just covering this region right here, as I figured this is the nice clump of open interest here. So again, pretty much the strike prices from 65 down to 54. That's what you guys can see here, 65 to 54. I'm just trying to make it a little bit more narrow. Yes, I could have included 57 and made this blue box a little bit wider, but at the end of the day, I want to make it as narrow as possible. Otherwise, we would just have a million lines on our charts and a million squares and rectangles. And if you did that, then it kind of defeats the purpose. The point is to keep it as simple as possible and just highlight what really stands out to you. So positive GEX rolls off. That is, if we head to the chart and we take a look at 64, let's just clean this up a little bit. So we look at 64, positive GEX rolls off. If we look at this, this is just right here. So past 64, the positive GEX just rolls off. It doesn't really look like people are that interested for this week above 464 currently. Then we can see right here, this is our N1 strike. So 54, if we come back here, 54, that is the strike price with the highest negative gamma. Logically speaking, where does the negative gamma roll off? That happens to be at 450. So below 450, it just looks like it kind of meanders out, or kind of just, you know, it looks lackluster, for lack of a better word. And then we have 447, but I'll deal with 447 if we get past 450. This is already a 2% drop, but given how extreme the market has rallied, then if we see the 2%, and if we saw a 2% pullback this week, I don't think anyone would be that shocked. So you know what? I'm actually going to put 447 on my chart right now. I have some alerts set down here from previous levels. 448 was pretty significant a few weeks back. And then also obviously 440 was pretty significant. So I think I had an alert set for if we broke that level. But as I'm looking at this now, I'm going to just add, let's duplicate this N1 and let's just include 447, which would be this one right here. And this I'll just label P3, because if this is going to be our P1, this is our strike price that has the highest negative gamma. This is P2, this is our strike price that has the second highest negative gamma. This would be P3, this is our strike price that has the third highest negative gamma. And it's pretty significant because this strike price is over 2.5% away and it has this much negative gamma. I think that's pretty important. So I'm just gonna mark it on my chart right here, 447. And as we said, this will be our N3, and we can put that there. So this is 450 is where the negative GEX rolls off. So right here, but this also happens to be our N2. So I might as well put that on our chart. I'm going to call it N2. Let me know that that is the strike price that has the second highest negative gamma. And I don't know if this level will hold or not, so I just made it dash because it's not super important. I think this level will end up acting a little bit more as a important level. If price was to breach 450, then I would expect price to be pretty choppy around here before it breaks down and heads to 440, if that happens. And then on the top side here, I marked a P3 just because it looks a little sketchy, I guess you could say, above here. You know, again, I don't want to be too biased, but now things are starting to look a little bit ridiculous. And if we got over 460, in my opinion, the next logical level to see some sort of price action stalling out would be 462, because it's almost similar to the previous week here. So if we take a look at this, it's almost, imagine a roller coaster. The energy it would take for it to get above this price might end up falling here, and then what's this strike price right here? This would be 462. I don't see us getting that high. However, I want to be aware of that. So that's why I marked that on the chart, because it looked like price, if it head here, we're likely to stall out around this region. Now, if we just look at this here, if price was to try and go higher and it can't, imagine it like energy just bouncing back. We might see this, and then it might head up to this level right here before it might bounce back down to this level, regain some energy, and then head back down before possibly falling down to this level. If this graph helps, I haven't represented it this way because if this is your first time seeing this, it might seem a little bit ridiculous or almost comical, but again, this, just think of price action, the energy it takes to head up and break this level. It might be a little bit too much. However, if it can climb over this mountain, this level might offer some support before it heads to this next region that price might stall out and then possibly head back to 460. If it gets back below 460, then we can imagine it just selling right off, bouncing around here for a little bit, trying to break 455 before bouncing right back up and hanging around here. That's how price tends to move around these absolute gamma strikes, and that's why I made sure to start this video by sharing how price action traded last week. And if you've seen any of the other videos like this on the channel, there are multiple weeks this year where we've been seeing the same thing. So this is nothing new for anybody that's been trading using gamma exposure. Last week's video was obviously a little bit more clean. It was more of the intro or a little bit more of a step-by-step guide. Sorry if this video was a little bit more confusing. Again, I recommend just checking out the video from before, as that should help paint the picture or shed some light on this. Let me see if I can find that one right here. So this video right here is the one I am referring to. Check that one out if this video confused you, as a lot of the videos moving forward this year might seem a little bit confusing as I'm trying to condense the time on these videos. Hopefully this helps, guys. You guys in QTA know I will now be sharing this within the chats, as well as the screenshots of the GEX profile, so we can have it and save it for our records. And then we grow, we learn, and we just get better and better and hopefully make more profits. Thanks for watching, guys. I hope you enjoyed it, and catch you on the next one.